Kitco Mining's special coverage of the Bank of Montreal's 32nd Global Metals, Mining and Critical Minerals Conference is brought to you by First Majestic Silver.
Hello, this is Paul Harris with Kitco at the 32nd BMO Global Metals and Mining and Critical Metals Conference in Florida. And a great pleasure to be joined this afternoon by Jason Attew, President and CEO of Liberty Gold. Good afternoon, Jason.
Thank you for having me, Paul. Good afternoon to you as well.
A pleasure to have you. Now, we're at the BMO event, as I said, and you worked for BMO Capital Markets for many years, so this must be something of a homecoming for you. Lots of familiar faces, and you've been through this. Must be very good to be back.
It's incredibly good to be back. Obviously, over the last 3-4 years, given the pandemic and the shutdown with COVID, it's an exceptional venue, and it's an exceptional job that the BMO does host and bring a lot of the industry leaders and a lot of future transactions and future relationships will be fostered at this relationship. So really pleased to be back, and you can just feel the energy here. It's really exciting.
I can certainly agree with that, and this is the largest event BMO's ever had here. I believe there's something like 8,000 individual one-on-one meetings booked over the few days of the event, so it's quite something.
No, it absolutely is, and when I was involved, I mean, it's interesting because all the one-on-ones you'd actually could do in effectively rooms. Now they're basically doing it out on the floor, and so it's, again, I think the enthusiasm and the interest in the metals and mining and critical metals, as they've changed the name here, is back, and very exciting years to come for sure.
So we need a bigger hotel. That's quite the luxury problem to have.
Yeah, that's the problem that they had back in 2008 when they actually did decide to come here, is they outgrew the previous venue or hotel just because of the interest, and the sector was exploding, and I feel we're at the cusp of doing that again.
Okay, and a number of the delegates I've spoken with just milling around say that the one-on-one meetings are great to sort of catch up with existing shareholders, meet potential new shareholders, maybe some corporate activity as well. But the real value is perhaps in the serendipitous meetings that happen just behind us here in the coffee area. Why do you think this is really such a landmark event that really makes things happen in the space?
Well, mining is global, and the fact is, I mean, this event obviously is the watershed, or the event that brings, the hallmark event that brings all parties together in one venue over the course of the 4 days. So you don't get this sort of venue. It happens obviously once a year. And it's also the fact that all metals and mining is such a niche, small market that everybody that's been in the business for some time, and I've been in the business for 30 years, are going to know each other. It's a relationship business to a large degree. Lots of different commodities. People work across different commodities, whether it's gold or it's future-facing metals now, or critical metals as they're branding it here at BMO, and copper and base. And so it's just a venue that again, every time of year at this time, and they've done it incredibly well, because as we were talking at the outset, for the most part, companies do have to report their year ends, and what a better place to do, 2-week roadshow in a matter of compressed 3 days at this conference here. But you're absolutely right. It's a water cool conversations. It's everybody prognosticating as to where the metals are going, giving everything that's going on in the macro environment today.
Imagine after all the stress of completing your year-end financials, to have a few days in Florida to perhaps relax and decompress is very welcome as well.
Yeah, look, it's obviously a beautiful spot for a lot of us that lives in more northern climates. February is not a hard sell. You can see a lot of people bring their families down here too. So yeah, it's just a fabulous event.
Okay, thank you. Now let's talk about gold M&A. It's in the front of many people's minds at the moment. As we're preparing for this, we're counting through at least 8 different deals that are on the table at the moment. Why is gold M&A starting to pick up, do you think? What's driving that?
Look, I think it was picking up a few years ago, but obviously everything got interrupted with the pandemic. You think of the transactions, one that I had a front row seat on with respect to the Newmont Gold Corp transaction. But obviously, when the world did shut down, it was very difficult to do detailed due diligence and actually get to site. So I think there was a backlog of interest, and certainly a lot of the high quality assets that we're now seeing come out in terms of transactions that are being announced. So I think a lot of it actually has to do with the fact that we did take a pause for a couple of years. The fact of the matter, if you look at from the senior perspective all the way down to the junior and the explorer perspective, in the gold sector in particular, every day that a senior or a producer is making safe, profitable cash flow or money, they're depleting their reserve base. They're depleting their assets. So they do have to always rejuvenate their portfolio. Some they can do organically through the drill bit, but assets only last a certain amount of time. So again, I think it's time, it's right. I've been espousing this for many, many years. I mean, the gold sector is very special, but it's incredibly fragmented, and it's absolutely, in my mind, ripe for consolidation. It should be consolidated. And so, look, I think we're right now at a point where we're going to see much more consolidation, much more smart M&A go forward, really responsible capital allocation from those parties that are acquiring assets, probably some very, very interesting merger of equals. And it's really about creating value for the investors that are here and the shareholders that are here. Because, again, these assets in particular, most of them are high capital, and it's a high capital intensity business that to perpetuate and keep the business going, you do have to acquire high quality assets.
With the sort of transactions that have been announced, and a number of those have been announced in the sort of 2 or 3 weeks leading up to this event, have there been any matchups that you think have been particularly intriguing or particularly surprising?
Well, I'd go with the biggest one, the senior one, the approach from Newmont to Newcrest. And again, they haven't formally put an offer in, but it's obviously out there because their intention to do that. And again, that will create, if they're successful there, that will obviously create the largest gold mine or the gold company in the globe in multiple assets across multiple jurisdictions. They do, if that combination is successful though, I mean, there's significant amount of base metal. There's 2 big polymetallic assets in that portfolio that would join. And that's also what, from a gold mining perspective, in my mind, is very, very healthy. When you can get byproduct credits and you can get other metals and other concentrates from a mining perspective, I think that's good from a diversification perspective. But again, it's the most interesting because it's obviously the one that's most topical. It's the one that's getting the most amount of headlines, and it just shows where we're actually going as an industry.
Okay, now we can't finish the conversation about M&A without bringing in your Black Pine Gold project in Idaho. Gold oxide, you've got 3 million ounces, it's heap leachable. That's the simplest processing method for gold. So you guys, I imagine, are a prime takeover target for somebody someday. Sure. What's your view, and how are you trying to perhaps advance things to make that happen?
So my view has always been, and I worked on the investment banking side for a minute, the advice that I would give companies like ourselves is you do need a very credible standalone plan. And so that's what we're doing. We can't control what's going to happen with respect to, again, some of the producers out there that might covet an asset like what we have. What we can do is control what we can control as a management team. So you continue along and drill off the endowment. The endowment, as you said, has hit the critical mass now of 3 million ounces, which it is the largest that we know of. It's the largest oxide gold deposit in the Great Basin that's not owned by a producer. So I think you're exactly on point. We are a target. But as I said, I think what we have to do as a management team is just continue to put our heads down and continue to de-risk the project. We've secured all our water rights. We're looking at doing some land acquisitions as well. Continue to use the drill bit, get ourselves into the economic studies so we can actually show the marketplace what the economics will look like. And at that point, if we have to finance this, we will finance this. And I'm here to build a company, but as I said, a credible standalone plan is the enabler of all the other options. And if another party does decide to come along and we think it makes sense for our shareholders, we'll share it. We'll show it to our shareholders. And I've had a history of doing that. But right now, again, we've got a fabulous asset. I joined the company 4 months ago, and I couldn't be more pleased because it's really de-risked, and it can every assay that we get back seems to be better than the last, and it's growing. And just very excited with the team to be moving that forward.
Okay, thank you, Jason. Who do you think would be a good matchup for Liberty or for Black Pine?
Well, look, it is a heap leach asset, as you've said, and they are technically straightforward, low capital assets. So I would say any sort of the seniors or the intermediates that have that in their portfolio that understand some of that complexity, or the low complexity, but do understand, again, you're pushing a lot of dirt because these are lower grade. Heap leach assets are lower grade, and being able to have some of the skill sets around sorting specific parts of the ore that get put on a heap leach pad, and then you basically run the solution over it to actually extract the gold. So I think the ones that would be most advantaged is to really understand, again, the attributes of what a heap leach asset would look like. I wouldn't, in that regard, I wouldn't think, for example, many of the Australians would be interested, because in Australia, for whatever reason, they don't do a lot of heap leach, but it's certainly well known in the Americas and certainly well known in South America. This is a really good way to, again, low capital intensity to extract gold in an asset such as we got when you have this oxide endowment of 3 million that you mentioned.
Okay, thank you, Jason. Now, I think it was interesting your comments about de-risking the project, because one of the transactions on the table at the moment is B2 Gold taking out Sabina Gold and Silver. And Sabina had permitted it, they'd partially financed it, they'd started the early works, they got 85% of the civil works, the most critical risk aspect of the project completed, and then the bid came in. So it's about as de-risked as it could be. Do you expect that to be a sort of growing trend, that the producers, the bigger companies, want to see things almost fully de-risked before they're prepared to take on the risk of breaking the checkbooks out?
Look, I would say it's on a case-by-case basis. First, obviously, Sabina's got a really, really high-quality asset. That's first, and it all starts with the geology. Secondly, Clive Johnson, who is the CEO of B2 Gold's always done very smart M&A. He's always seemed to have done it. The fact of the matter, we're not quite in a very enthusiastic cycle for gold developers and gold explorers right now. It's been pretty difficult. We're all trading pretty close to our 52-week lows. We're all trading in lows in terms of, if you think of a percentage on NAV. So I think a lot of it is actually based on, there's some groups out there that actually do transactions, arguably when there's some dislocation in the market. That's certainly what Clive has done. Mostly, though, what we do start to see is when there's a bit of momentum, and momentum can come in a few different forms. As you mentioned, there's 8 M&A transactions in the gold space. That's clearly a catalyst for a lot of the corporate development teams start thinking about, okay, what's our number one target, and should we actually be moving now? Clearly, the investors and the owners will be, telling management teams their desire for growth, their desire for jurisdiction, and mapping out to some degree what they would like to see in some sort of growth platform. But I think most importantly, what drives things is really gold price. And so I think from a macro perspective, we're in a very constructive phase on gold price. We haven't quite seen the uptick in terms of the commodity as of yet. In my mind, this is all based on the US dollar strength, and when we start to see that roll over, we'll certainly, I think, see a pickup in gold, which will create the momentum in everybody's stock. And therefore, again, I do see quite a bit of gold M&A happening, maybe at Q3, Q4, the back end of this year. But there's certainly the teams that are doing all the technical evaluations, they are probably busier than they've been in the last 3-5 years.
I've met with various people in business development teams, and coming after COVID, everybody's flying around the world again, really, really busy at it. So I think I would agree with you there. Okay, so Black Pine, what are going to be some of the key goals or key things you want to achieve there this year?
Yeah, so again, we just put out our latest mineral resource, as you pointed out, 3 weeks ago. That's now over 3 million ounces. So that was a critical milestone for us, because now we can actually demonstrate we've got scale. This basically, it is a heap leach asset, so you do have to think in recoverable ounces, but back of the envelope, this tells you this is a 15 to 17 year mine life, 150 to 170,000 ounces at really, really good margin. So what we're going to continue to do is we're going to continue to drill off and expand that resource. We'll have another resource out toward the end of this year, which will capture some of the drilling we couldn't get in to the resource that we reported 3 weeks ago, as well as all the drilling. Probably the cutoff will be September of this year. There's another 50,000 meters that will include an updated resource. In that resource, what we're attempting to do is, because we've again established the 3 million ounce, we're trying to find higher grade near surface, very important in a heap leach, that you, from an NPV maximization perspective, you get actually a starter that obviously has grade near surface. Continue to doing the de-risking work. We've got a lot of metallurgical work that we'll be releasing over the next few weeks on the deposit. And then obviously leading to the point where we'll actually get an economic study out to the market. Now, we haven't put an economic study out to the market for a couple of reasons, and why we'd say it's probably appropriate now for us to think about that. Firstly, the resource that you talked about, 84% of it is in an indicated category. So that would be picked up, most of that would be picked up in a reserve when we did do a pre-feasibility study. But most importantly, it's the environment that we are in now, and I think we're still in a very much an inflationary environment. We haven't started to see the disinflationary process that the US Fed has talked about, all the economists have talked about. So from a mine capital perspective and a consumable perspective, and again, we're not a big mine capital because it is a straightforward heap leach operation, so there's no mill, but there's trucks and shovels and mining equipment. They're still at pretty escalated prices. And so we think that's going to start to roll over and normalize Q3 of Q4 of this year. And so if that does happen, then we'll quickly put an economic study so people can see again what the economics of black pine will look like. At the same time, I said we're going to continue to drill. We've got all the water secured for black pine, so we're completely, and in that area in the Great Basin, that's as precious as gold, is actually having your water tied up. But there are some land acquisitions and other things that we do need to do to further de-risk it. But it's really, again, making sure we're doing all the right studies around geotech, waste rock characterization, hydrology, continue our baseline to get to an economic study basis.
Okay, well, I wish you the best of luck with that, Jason. Jason Attew, thank you very much for joining us today.
Thanks, Paul. It's a real pleasure.
And I'm Paul Harris. Stay tuned to Kitco for more from BMO.
Kitco Mining's special coverage of the Bank of Montreal's 32nd Global Metals, Mining and Critical Minerals Conference is brought to you by First Majestic Silver.